Welcome, everybody, to a new week. It's Monday, April 21st. We're heading into the last full week of April. And we are back from the short trading week last week with the Thanksgiving holiday. Let's go over what's kind of happening today. It's a little bit of a slower day, and we're a little flat today, which is, balance and predictability is actually a nice thing for a change. One of the things that's been talked about is a concern over the US dollar losing its reserve currency status. Now, while the dollar has come off its highs and weakened in the last few weeks, it's still really much stronger than it was just 5 years ago. So, the IMF, International Monetary Fund, recently released figures showing the official numbers of foreign currency exchange reserves. What that's telling us is the dollar made up 58% of the foreign exchange reserves, well over half of everything. The next closest was the euro at 20%, less than half of where we're at, and the yen at around 5%. Now, a lot of people have been talking about the yuan could replace, China's currency could replace the dollar for the reserve currency. But keep in mind, that represents only 2.2% of the foreign exchange reserves. The dollar has a huge lead on every other currency, and statistically, numerically, data wise, it's nowhere near losing its reserve currency status. So a lot of that is just bluster that you're hearing. Now, Lacy Hunt, very noted economist, released his quarterly newsletter last week, showing that the real M2 money supply and ODL, which is other deposit liabilities, now that removes currency in retail money market accounts, and that he feels is an even better measure, and those are contracting significantly. Now, this has always been deflationary and a sign of a slower growth ahead. And we've been seeing that with multiple different reports from the Atlanta Fed on their GDP estimates for Q2. Now, he also believes tariffs are bad for growth and have historically led to recession. Lacy thinks the Fed should be preemptively cutting rates ahead of recession. Now, what we saw also this morning was Fed member Austin Goolsbee spoke on CNBC about what he thought about preemptive rate cuts and are they on the table. He does think they're on the table, but it's a very large and deep table, and there are many things on it. He tried to emphasize. Now, he appeared to want to be patient because he wants to see the effects of the tariffs as a temporary spike in inflation versus long term. Now, this could change if there's continued retaliation on tariffs. He'd like to wait to see what plays out with the 90-day pause also. Bottom line, Mr. Goolsbee said the U.S. economy was in good shape ahead of the tariffs. It's near maximum employment, and inflation is around 2.5% and heading lower. So he thinks things will get back on track and that rates will be lower next year. Now, many members also have admitted that monetary policy is somewhat restrictive, and they said tariffs are a one-off price increase, which is different than persistent inflation. So those are interesting comments coming out of different people from the Fed. Now, this week's a little slower week with data, but obviously we don't know what's going to happen on the political side. Wednesday, we get mortgage applications, new home sales, which is a very important number. Thursday, we get our jobless claims number, durable goods orders, which will be very closely looked at, and existing home sales. Currently, mortgage-backed securities are down 20 basis points. 10-year bond is up 4 to 4.37. In pre-market, stocks were down about 350 on the Dow. Now, as I'm looking, the Dow is down just a tick under 1,000 points. So we have volatility going on in the stock market that's persisting. Now, mortgage-backed securities broke sharply beneath their 100-day moving average at open this morning, but have since climbed back and are sitting pretty much right on the line where they started. So that's actually a good sign. So we'll keep watch of everything, bring you up to date. The Market Update Desk, your original singular market news source for West Michigan, 616-293-2189. Hope you have a great afternoon.